Genting Malaysia Berhad is one of the leading leisure and hospitality companies in the region. The company was originally established in 1918 as Resort World Sdn Bhd and was later restructured and renamed to Genting Malaysia Berhad in 1989. It has been publicly listed on the main market of Bursa Malaysia since December 1989. Its vision is to become a global leader in integrated resort operation, and its mission is to focus on delivering high-quality hospitality and entertainment experience. In terms of operations, Genting Malaysia manage a wide range of business such as hotel, casino, theme park, and also seaside resort. Its flagship property is Resort World Genting, which offer around 10,500 rooms across 7 hotels. The company also operates Resort World Kijal and also Resort World Langkawi. Internationally, Genting Malaysia has a strong presence in the UK, US, Bahamas, and also Egypt. In 2024, the company recorded about RM10.9 billion in revenue and welcomed 39 million visitors across all its properties. Next, I will explain about FAR570, which is the accounting standard for operating segment. So, FAR570 is the Malaysian equivalent of IFRS 8 and it's focused on reporting operating segment using the management approach. This means that segments are reported based on how management internally view and assist the business. The result of this segment must be regularly reviewed by the Chief Operating Decision Maker, or we call it CODM. This standard applies mainly to entities with publicly traded securities, those in the process of issuing securities, and also entities that voluntarily provide segment information. The purpose of FAR570 is to help users better understand an entity's past performance, assess its risk and return, and also make more informed decisions. To identify operating segment, the business component must earn revenue or incur expenses, be reviewed by the CODM, and also have discrete financial information available. After segment identified, FAR570 requires companies to determine which are reportable using the 10% threshold for revenue, profit or loss, and also asset. There is also 75% rule where the total external revenue from reportable segment must cover at least 75% of the entity's total revenue. Segment may also be aggregate if they share similar economic characteristics. In terms of disclosure, companies must provide information such as segment revenue, profit or loss, assets, liability, and also reconciliation to consolidate totals. Entity-wide disclosure are also required, including information on product and service, geographical area, and also major customer. This information typically appears in the notes to the annual financial statement. For Genting Malaysia, the company has several operating segments, including Malaysia, United Kingdom, United States, Bahamas, and also Egypt. This segment reflects how management monitor performance across different geographical areas.
So the second question is about the Chief Operating Decision Maker, CODM. The definition is the person or a group who is responsible for allocating resources to operate segments and evaluating their performance, as it uses internal management reports to make key strategic and operational decisions. For example, like our company, Genting Malaysia Berhad, the Board of Directors and the Executive Managing Committee who perform the CODM rule as it assess segment result using adjusted EBITDA as a key metric and compare with the Petronas Dagangan Berhad, which they use Managing Director and the CEO that will perform the CODM rule with the senior management as it assess retail and commercial results. Moving on to the types of segmental report used in the financial reporting. Genting Berhad Malaysia use two types of segmental report, which is the first one is business segments report, like it based on nature products or services, as leisure and hospitality, where it comprise integrated resort activities that including gamings, hotels, tours and travel services, and other supporting services, and properties where it involves investment, management, and development. The second one is geographical segment reports, like leisure hospitality operates in Malaysia, United Kingdom and Egypt, and United States and Bahamas. Here is a snippet provided for each type segmental report, which is the total revenue shows for the leisure hospitality was 5,405,900 ringgit.
Segmental reporting provides important insight for user of financial statement because it breaks down a company's performance by business segment. So right now, I explain two key benefits using Genting Malaysia example. The first benefit is a clear understanding of business performance. Segment reporting allows users to see which part of the business are performing well. From Genting Malaysia interim report, the Malaysia segment generated RM3.4 billion in revenue compared to RM924 million in the UK and Egypt, and also RM1.07 billion in the US and Bahamas. This helps users identify the most profitable segment, which is in the Malaysia. The second benefit is better decision making and risk assessment. Each segment has a different profitability level. For example, Genting's EBITDA show Malaysia at RM1.12 billion and in the UK and Egypt at RM125 million and also US and Bahamas at RM237 million. This difference help investor evaluate which segment carry more risk or higher costs. Overall, segmental reporting increase transparency and support more accurate investment and business decisions.
Now we'll move on to the part B. What is MFRS 134 interim financial reporting? Firstly, an interim period is financial reporting period shorter than a full financial year, commonly 3 months or 6 months basis. This report can be either a complete set of financial statements or a condensed version, depends on what the company choose to present. The main purpose of MFRS 134 is to ensure that an entity provides timely and reliable information to users between the annual reporting dates. The MASP encourage publicly traded entities to follow this standard, prepare at least at the end of the first half of their financial year, and to make these reports available 60 days after the interim period ends. Now we'll move on to the significant events that affects an entity's financial position. The first significant event is the acquisition of subsidiaries. During the interim period of 2025, the group acquired Genting Casino Stratford in the United Kingdom and the remaining 51% membership interest in Genting Empire Resort LLC in the United States. This acquisition involved a total purchase amounting to 333.8 million ringgit. This acquisition increased Genting Malaysia's total asset as it brings in additional assets such as property, equipment and goodwill. Moreover, it also requires substantial funding, means the group experienced a reduction in cash or increase in borrowings, depends on how the purchase was financed. Lastly, there is also a goodwill because the subsidiaries were purchased at a value higher than the fair value of their net assets. The second significant event is related to dividend paid. For the financial year ended 31st December 2024, Genting Malaysia declared a final single-tier dividend of 4.0 cent per ordinary share amounting to 226.7 million ringgit. This dividend was paid on 10 April 2025. The payment of 226.7 million ringgit reduced the company's cash as this amount is paid out to shareholders. Additionally, it also reduced retained earnings because dividends are distributed from the company's profits.
Next, I'll be explaining to you about the interim reports of our company of choice, which is Genting Malaysia. First is statement of profit or loss. Here we can see the performance of Genting Malaysia's company in the individual quarter and cumulative period ended 30th of June 2025. For the second quarter of the year, the company has increased its revenue from 2.669 from 2024 to 2.9 billion. Overall, the company has recorded a much higher profit in this quarter compared to the last quarter, which is from 398 billion in the current quarter than compared to the last quarter, which is 62 billion, which shows a really high increase, which is mainly driven by higher business volume and foreign exchange gains. Next, I will be explaining to you about the statement of financial position of our company Genting from the current year, which is 2035, and the cumulative year, which is 2034. The total assets has increased significantly from 28 billion to 30 billion. This is due to the acquisition of assets in the company, while the equity has decreased slightly. Overall, the company really has a strong base of owning the property, plant and equipment. Last but not least, I will be comparing the statement of changes in equity from the year 2035 and 2024. In 2034, the profit attributable to shareholders has increased very much significantly from 499 million compared to the 140 million in 2024. However, the equity still decreases. Why? Because firstly, the company paid dividends and there were large negative foreign exchange movement. Unlike last year in 2034, they were positive. So even though the company's profit improved in 2025, equity still decreased compared to 2024 because reserves were affected by currency losses.